This is me 4 years ago, frustrated, angry, and in so much debt. I listened to all kinds of mentors, followed all kinds of strategies, but I just continued to throw money down the drain trading Forex. Now this is me 4 years later, living life in total freedom, busy securing a great future for my wife and 2 beautiful kids, still through Forex trading. I'm pretty sure there are a lot of you that want to change their lives from the first photo to the second photo, living absolutely free. So, in this video, I'm going to show you how you can start trading step by step, and literally all that you need is a smartphone. Now remember, if you ever get lost through the steps and the topics that I'm about to cover in this video, just come back and rewatch it. It is extremely important for you to gather as much knowledge as you possibly can before you attempt to open your very first trade. But before you actually attempt to take your first trade, I need to explain to you what Forex trading is and what is going on behind the screens. You need to understand how the mechanics work before you actually try and take part in this. Now, you get all kinds of trading, but today we're going to talk about Forex trading. You've probably already been exposed to it or heard a couple of friends talk about it, so hopefully after watching this video and taking notes, you can be part of this conversation too. Now, what is Forex? Forex is short for foreign exchange. It is a global marketplace where currencies are traded. It's like the stock market, but on steroids. It is bigger, faster, and open 24/5. Instead of buying shares of a company, you're buying and selling currencies, hoping to make a profit from their change of value. How big is Forex? Very big. We're talking about $6 trillion per day market. That's trillion with a T. To put that in perspective, that's more money moving around in a day than most countries move around in a year. The market doesn't sleep, and it definitely doesn't wait for anyone. That's why it's the perfect playground for traders. Now, who's playing in this massive market? You've got the big dogs, central banks, financial institutions, and corporations, making moves to manage their risk or speculating to make a profit. And then there's you, the retail trader, who can simply dive into this ocean. All you need is a laptop and a decent internet connection. But don't let that fool you. This market is as wild as it is exciting. Here's how it works. Currencies are traded in pairs, like Euro USD or GBP JPY. You're basically buying the one currency while simultaneously selling the other currency. It's a constant tug of war, and your job is to try and predict which currency will gain value while the other one is losing it. Think of it like betting on a boxing match, but with euros and dollars instead of punches. Let's talk the lingo. When people are talking about bulls and bears, they're definitely not talking about a wildlife documentary. Bulls push prices up while bears push prices down. Simple. Then there is spread. Not the butter kind, but the difference between the buy value and the sell value. You want that tight, like your grandma's hug. And don't forget about stop loss. This is your safety net. It's your way of saying, all right, I'm out of here, just before things get ugly. Use it, love it, never trade without it. All right, so now that you have a slight understanding of how trading works, let's dive into the only 2 platforms that you need before you start trading. We'll work with TradingView. We will probably spend around 90% of your time on. You will analyze the charts and pretty much make your trading decisions. After that, we'll go over to MetaTrader. Now this is where you actually execute your trading decisions that you made on TradingView. Why do we use these 2 platforms? TradingView is a world-renowned trading platform with a lot more features than MetaTrader. But MetaTrader is very robust and very simple once you get the hang of it. MetaTrader is where you actually have your trading brokerage account connected to, where you will be taking your trades and managing it off from. More of that later, but first, let's dive into TradingView. Okay, so this is where you want to start. You want to start at tradingview.com. Just type it in your web browser. Then at the top right, you can simply click Get Started. Now, at the very beginning, you definitely don't need a paid plan. It's free forever, as you guys can see. But click on the sign up button, then fill in your details, and then you will simply be signed up. After you've signed up, you will be directed to this page where you can obviously choose a package, which once again, you really don't need. You just need the free option for now. And then you can go to your super charts. You go over to products and you click on super charts, and then you'll be brought to a very blank slate of TradingView where you can customize it. There on the right, let's quickly run through it. You can have alerts, which is what I really love. You can have your data window where you can just get more information about the open, high, low, close, which is not that important that you need at this moment. You can add your ideas. There's even a public area where people share their ideas as well. And then you can have your notifications set on. But let's close that. Let's go to your watch list. You can even customize your watch list. You can see all of your watch lists are here. So let's edit this, and then I'm going to make mine MadCharts. Okay. So we got that there. At the right, you'll see you have indices, you have stocks, you have futures, you have Forex. So all kinds of instruments that you can trade with. Now let's quickly clean up all of this. We can delete these name tags. If you have the paid version, it's going to come up ads every now and then, which is completely fine. In the beginning, you definitely don't need all of these paid features. You can simply click on the trash can here at the right, where you would simply just add the pairs that you want. Okay, so as you can see, I only have gold on. You simply just click on the instrument and it pops up for you to trade with. If you want to add a pair, you simply go to add symbol and you type in, let's play with Euro USD. You can add GBP JPY. So let's stick with GBP JPY at this moment. Now as you can see, you can just simply click on the pairs and the market will hop over to that tradable instrument. Now I don't really use volume in this instance. I use volume in other instances, but at this moment, let's just remove it. Okay, so now that your TradingView is clean, let's go to the other toolkits that you can have. You can have a replay function, which is pretty cool, where you can go back in time and you cannot see in the future, so you only revert back to time. And this is a very key element for when you're backtesting, okay? You can set your alerts. You can also add a lot of indicator templates. As you can see, there's a lot of custom ones here, but if I go over to indicators and I add, for example, moving average, let's add this one, let's add this one, let's add this one. Oh, I can only add two. So you can see that we have two indicators on. Then I simply go to save indicator template and I can say MadCharts. So now every time, let's remove the indicators, I just simply right click on the chart and there's a bunch of options for me to have. But I just removed my indicators. When I click on this indicator templates, I simply click on MadCharts again, and then there we go. There's my indicators up and running. So for the most part, we are using candlesticks. We'll quickly run through that just in a bit. The time frames here at the top left. So in trading, the market is fractal. Now, when I say the market is fractal, that means that everything that happens on the lower time frame happens on the higher time frames as well. So I'm currently on the daily time frame, which means that every single candlestick represents a day. So if I go, for instance, to the 4-hour time frame, what does this mean? This means that every single candlestick represents 4 hours. You can see here on the right that we have a timing window, okay? That indicates that when that timing is over, then a new candlestick will open. Let's go to the 5 minutes, and then you will see, let me just readjust. If your chart ever gets sloppy and you don't have any idea where you are, just double click on the pricing scale here on the right, or if it is like this, you can simply just double click on the pricing scale at the bottom, where it will just readjust the chart for your convenience. On the 5 minute time frame, you will see that a new candlestick will open up in 6, 5, 4. There we go, it's going to open up right now. There we go. So exactly this happens on each and every time frame. So when it's on the 5 minute, this 5 minute structure that you're looking at over here, let me just draw this for you, is going to be in a smaller scale on, for example, the 30 minute. And if I go even higher, the 4 hour, you will barely see my drawing because it's included in that 4 hours. But if I go back to my 5 minutes, you can see the drawing again. So this really just indicates every single candlestick represents 5 minutes. Okay, so when I ever talk about time frames, that is what I'm referring to. But for the most part, let's stick on the daily time frame. But if you ever just, without clicking on this drop down menu, you can add favorites. So the daily, 4 hour, 2 hour, 1 hour, 30 minutes, and 15 minutes. These are my favorites, but you can go ahead and adjust it just to according to your liking. Then at the left side panel, you can see your tools for technical analysis. But if you just slide down a little bit to the right, you will see an arrow, which will also create a drop down menu for you to spot all of the tools. Now, once again, you can simply just add favorites, stuff that you like to use. So let's add the long position, the short position. This forecast tool I don't really use because you can simply just click shift, click, and then drag it over to the right. So it's once again shift, left click, and then drag it over to the right. This will give you the pip value to the buying side and the pip value to the buying side. Remember, bulls, bears. You have your drawing option where you can click brushes, your arrow marker. So for reference, this is really just very important for you if you don't really want to go to the left hand side. I barely use this left toolbar because I have my favorites up here. And if you guys can see on my TradingView, this is all of my favorites that I currently have on. So you just simply get adjusted to what you like to use and then just stick with it according to your trading style. Okay, so that's basically it for cleaning up and understanding your TradingView. And once again, if you want to clean up your charts, you can, for example, I like blue and I like black, but not the one that's too black. And then you can simply right click on your chart. That's the way I got there. I went to settings, and then at the symbol panel, you will then see that you can adjust these colors. Okay, I like to add my logo and my title. You can adjust your pricing scale to the bar ratio. That's pretty simple. You can add a watermark that's constantly there so that you know what you're trading. I like to leave that on. The grid lines, you can add your grid lines as well, or you can simply remove them. That way you have a clean chart. You can also adjust the color theme to being dark, but then you will see that your colors just went back to the standard colors once again. So you just have to simply adjust them. But at this point, because my background is black or well darker, I will just use a slightly lighter color for an instance like this. Okay, there we go. So now my chart is according to my liking. Let's just adjust the grid lines. You can really just play around with the settings and then just get accustomed to what you want to see with regards to your trading style. But this is what I like. I really like the effectiveness of it. I like my charts to be clean and simple. So when I hop onto the charts, I know it's accustomed to my liking. My favorite toolbar is there. My favorite pairs are there. So it's just very simple and effective for every time that I trade. Okay, so we touched a bit on time frames. Now I'd really like to touch more on candlesticks. So if you look at the top left on this candlestick type of figure right over there, you will see that you have a lot of different ways to look at the markets. But the most obvious one, and the one that's the most favorite amongst traders, might I add, is the one use candlesticks. You can use a line chart, you can use an area chart, whatever fits your style. But in Forex trading, one that's used the most is candlesticks. Remember in the beginning I said that we can look at extra more data like the open, high, low, close. So that is with regards to candlesticks. A candlestick is formed like this. It shows you a very different figure according to the line that you see, that vertical line. You also get a body attached to that vertical line. Now the vertical line indicates the high and the low, but the actual body attached to that vertical line shows you the open and then the close in a bearish candlestick. The opposite is true when you refer to a bullish candlestick. That's where the body opened on a bullish candlestick and it closed quite far from the high. So that means that the market, where's my arrow? So that means that the market went up, it came back down, and then it closed somewhere over here. That forms a candlestick. That is why multiple time frame analysis is very important. We'll jump down to that later. But that's just in essence how candlestick works. You can start to read different styles of candlesticks, how they form at different key levels. That's very important and pretty much imperative for you as a trader to understand how these candlesticks form, why they form, and then at the end of the day form a specific candlestick pattern that you like with regard to technical analysis, and then basically try and get an entry. So definitely play around with TradingView. I mean, it's free, guys, so play around with it, get accustomed to it. Start to get really free and in the flow with it, because when you're trading, you're going to be using this 90% of the time, whereas when you go to MetaTrader, which we're going to now, you'll see that that's just basically where you take your entries, right? But TradingView is where I'm on most of the time. It's my favorite app on my desktop or on my phone. You can also have TradingView on your phone. But for the most part, it's just for analyzing, and the features on it is incredible. So really, when you're at home, just practice it and get accustomed to how these pairs move and how TradingView moves according to these pairs. So what I like to do now is I like to hop over to fundamental analysis. Now, fundamental analysis is the first leg of the two-leg foundation that we have as traders. You have fundamental analysis and then you have technical analysis. Okay, so the place I watch my fundamental analysis, there's a lot of different places where you can view fundamental analysis, but the place where I spot it and that a lot of other traders spot it is a place called forexfactory.com. Okay, so I'm at my calendar aspect of the most part here at the top tab. You also can get market outlook, you can have some information about brokerages, but for the most part you can have look at what's going on in the overall economy. You can have look at massive news outbreaks, minor news outbreaks, just get an overall idea of what's going on around the globe with the currencies. But what I like you to focus on is a calendar. Okay, so here in the calendar at the top left, you can see you have your date, where you can see what time the fundamental event is being released. You can have an exact time. Sometimes it says tentative, that's when it is released, probably the whole day or not at a specific time. And then when you scroll down, you can see the time varies. You can also view the currency pair where it's being released on. And now I want you to focus on the folder color. So when it's yellow, it means that it doesn't have a massive impact. This is a great feature of Forex Factory. When it's yellow, it means that the impact of this event is really not that big. It's just a normal news release. When it's orange, it means that okay, stuff is getting pretty serious now, but it's still not something that you need to inquire about when you're trying to take an entry or an exit. It's just something noteworthy. But when you see a red folder, that's when things are getting serious, or when it's actually already serious. That's when, for me personally, I like to take trades off from this, not at the exact news event. We'll dive into this later, but these events are most probably the events that drive volume into the markets. Super important. It's at the impact tab. You can see the different types of folders, and then you will get a description or a name of the fundamental release. So you can see, for example, we have CAD here with the folder color, and then you can see the description or the name of the impact. What I really like about the whole Forex Factory features is that you can click on a folder and then you can go and read up a whole lot of information on the specific news release. You can also go into history and you can see how certain values made the market react to that certain news event. So it's very informative, definitely worth a read. I mean, with fundamentals, it's a lot of reading, folks, so definitely just stick to Forex Factory. It's very easy, very simple to use. You can definitely play around with it as regards to setting your filter. You can set which folders you'd like to see. the different type of event types. You can see, you can also select what currencies you want to have included, and then you can say apply filter. Now we'll only give you the massive news events. This is basically what I use just so I can know what to watch out for, when to trade and when not to trade. Okay, so after you got fundamental analysis down, let's hop back to TradingView. We touched base on multi-time frame correlation, but I really just want to go a little bit more in depth into that, because when you're starting out trading, this can become very confusing to you. So I want to squash this right off the get-go, so you can know when you're looking at a chart that it can become quite overwhelming, but not with this. This will really simple it down for you a bit, and so that you can, when you're starting out, you can know what to look out for. The key in analyzing any forex market or any instrument for that matter is to have a higher time frame bias. Higher time frame, in my opinion, is the weekly, the daily, and the H4 perhaps. It depends on some people's trading styles, but to me, that's a higher time frames. When you look at the higher time frames, you like to get an overall idea of what's going on, and then when you like to get an entry, depends once again on your schedule. You'd like to get an entry on the lower time frames, but have that combined with your higher time frame bias. For example, we can see that we have a massive bearish candlestick, so I'm definitely not going to buy here, right? But I can buy here if I have some other type of analysis. For example, where's my rectangle? For example, I can have a zone of interest over here. Let me just adjust the background. I can have a zone of interest over here, and then for the sake of looking at an entry, I don't look at an entry on the daily time frame, but I see we are on a key area. So what do? I drop down to lower time frames because I want to get more detail, right? So on the H4, what do we see? So we can see that the market is coming down, but with this bullish candlestick, it is indicating that we're gaining strength. All right, so what I like to do is I like to look at a thing that we all call structure. Now when you look at structure, that is basically what I like to call, once again, the language of the market. So when you're at a party with friends and you're talking about GBP, JPY, the main thing that you guys talk about is, hey, what structure is the market in? If you've been trading for a while, don't lie, that's what's happening for the most part. Okay, if you want to buy in a bullish structure and you want to sell in a bearish structure, in any perfect world, the market will look like this. Okay, but that's not the case. The market usually looks something like this. Goes up, goes down, goes up, goes down. Like anything in life, you get good times, then a little bit bad times, a lot better times, a little bit bad times, and you get a good spiral. Okay, like that's the way the market trends. This is what I'd like to call a bullish structure. Okay, now quite the contrary is true when you look at a bearish structure. The market is not going to look just like this. We would most probably see the market coming down. Let me just lock it up, down, up, down, up, down. Now basically looking on this at this structure point for reference, you want to get in either at the retrace, but the key is, when is the retrace done? This is what we call a retrace, the market coming up as opposed to the overall trend. Or do you want to get in when we break that low at the start of the retrace? This is where you start to develop your strategy, all right? So I cannot explain to you when you should enter. I can only explain to you structure, and you should look at a bunch of other factors like your psychology, your risk factors. But the main overall goal for you as a trader is to spot the currency pair which is gaining strength or which is losing strength, and then when you revert it to technical analysis, you want to spot which entry you are getting, basing it off from structure. So that is for the most part where you view structure. So now you see that we have a bullish structure, bullish candlestick over here. Now if you go down to the lower time frames like the 15-minute, you can see what I'm talking about. you can see that we have the market coming up, giving us a slight pullback or a retrace, coming up again, coming back down, and then hopefully this is what we want, coming back up again. Now this is a little tip. If you've been trading for a while or if you're just starting out, I might be saving you a lot of time. If you want to look at structure, I always say this to my members, if you're looking at structure points for entry from H4 downwards, you're wasting your time. The higher time frames carry structure so much more important than anything else. So what I mean is this: we now have created a bullish candlestick. We then shot back up, but the market, as you can see on the timing window, which I explained previously, we're moving back down. But look at the vertical line that I explained to you guys. We have created a high. So remember what I said in the beginning, the markets are fractal. So this high on the H4, when you go down to the M15, you will see it's a high on the M15 structure again. Let's look at structure. Going up, going down, going back up again. So what do we want? If we want to buy, we want the market to do this and then go back up, breaking this high. But when this high is broken, what will we see on the H4? We will see a candlestick pushing it up. So my tip to you is draw your highs and your lows of the candlesticks on the H4 and up. That way you can know this is the high that we want to have broken before we can try and take any positions, because you know that's when the candlestick will flip and ultimately price will go into your anticipated favor. This then brings me to my next part, support and resistance and trend lines. I'm going to really touch base on this because this is a radical point in trading. A lot of people have a lot of different styles, but what I want you to remember, and don't let anybody tell you anything different, is just key points in the market. There's no specific way of drawing it. I don't care what you draw on the charts, what you draw on this market or on your desktop that you see, the market will go either direction anyway. So what you need to do is you need to have data collected, which I'll show you how to do, and then at the end of the day have that data backed by your technical analysis and fundamental analysis, and then you have an edge in the market. So support, I want you to think of it as a floor. Resistance, I want you to think of as a roof. So resistance will always be at the top. Just enlarge this for you, make it white. And then support will always be at the bottom. Let me make this the floor. Let me make this the roof. So this is basically your house. You've got your people living in there. You've got, whatever story you want to create. You've got your human beings in there. You can do whatever you want. Just make it fun. I'm not Picasso. I'm a trader, so don't judge my drawing skills. But at the end of the day, resistance is at the top, support is at the bottom. What happens in between, that is how you draw your trend line. Or well, that is how I draw my trend lines if I ever use trend lines. You have to be in the flow of using trend lines. You cannot use a certain thing for a certain time in the market. You have got to learn to adapt. But for the most part, I like to use trend lines to track that movement. Brush. To track that movement from the support area to the resistance area, and then track that break. That's what I like to use my trend lines for. Let me show you an example. So let's say we had a resistance area over here, which we don't from on this chart. I don't want you guys to get confused. We have a support area. What do? I draw my resistance, my trend line on from support to resistance, and then I try and track that break. Or you can go with the trend. You can simply, there's my circle, connect 2 or more areas, and then that will give you your trend line bounce for maybe in the future. I don't know, it all depends on your trading style. So support, resistance, trend lines, that's 3 very basic technical analysis tools. I want you guys to really practice this. This is your homework. Practice this, learn how to use them. Don't go and draw trend lines like this. That's too steep. No market will consecutively move like that. Okay, so stick with the basics, practice it over and over again and get accustomed to it. Okay, so now at the end of the day, you did your analysis. Let me just remove this because I really like clean charts. And let's say you are anticipating a selling trade here at this point. So now what I did is I simply just use my short position tool that you can get at 1, 2, 3, 4 at the 5th tab. You're on the left, you can see short position, long position. Now this will indicate my stop loss, which I already explained to you what a stop loss is used for, and this will indicate my take profit, which is quite the contrary of a stop loss. This is automatic price level, where if the market hits that area, the computer or the trading platform will get out for you. Okay, but let's take this trade in anticipation together. So I place my stop loss above the high because I don't want to lose that much. Definitely not. I just want to lose, let's say for example, 40 points, which is already a lot. I'm referring to this area right over here, 39.5, 40. Okay, so I'm anticipating the market to move to this area and then come back down. Why am I anticipating that? Because in the beginning I said, look at my daily candlestick. It's already fat and thick. We want to move with that momentum. So this brings me to my next part, calculating risk and position size. Okay, so you simply go to your web browser, you type in myfxbook.com and you go to FX, just skip the ads, you go to FX calculator, then you can select the currency pair, GBP, JPY. I'll put the link of this in the description. You can select your account currency, account size. Let's say you have a $10,000 account size. Your risk to reward ratio, you simply go to, you simply go over here and it will already show you the risk to reward ratio is 3.26. So you go to risk to reward ratio, type 3.26. Stop loss in pips is 40 pips. I'm referring to that middle value over there. Okay, so let's say I want to use 1.00 lots. So now we calculate it. So now it's going to show to me how many units I'm using, my correct sizing that I want to use, and also the amount of money at play over here. Okay, that's my position size I need to use with regards to that stop loss and that take profit. So you don't, at the end of the day, you don't have to go and guess your position size, but for the most part you can go to FX calculators and there's a lot of calculators. You can calculate your pips, you can calculate your margins, you can calculate, let me just remove this, your position size, currency converter. There's a lot of calculators for you to play with. So at the end of the day, the position size calculator is definitely my favorite, because that then at the end of the day gives you this correct sizing that you need to use for that particular trade. Okay, so before we insert those values, we need to have a brokerage account. Now, a brokerage account is where you place your funds into. They have to be regulated, of course. I mean, there's a lot of talk if they're regulated, unregulated. I like regulated brokers, and the broker I use, I don't like recommending brokers a lot because I just like to mind my own business and do my own thing. But the broker I'm using is HF Markets. Okay, so you type in HF Markets and it is this one. You simply just click on the website. You can say accept and continue. You can say trade Forex and then you enter your details. This will then bring you to your dashboard where you will simply get your login credentials, or most of the times you get it via email. Okay, If you're trading on your cell phone, let's go to our cell phone. Okay, so you successfully downloaded MetaTrader on your mobile device, and when you open it up, it's going to look a little bit like this. Now the first thing you want to do is clean it up. Select all these pairs because we're not going to be trading them, and then you remove it. Now if you want to add a pair, you just enter the symbol, and the pair we did a risk management research on was GBP JPY. So let me just remove this one. Now we got GBP JPY on. Okay, let's connect via the chart. Now when you tap on the chart image, you're going to see that you can view the candlesticks that we discussed. All right, so just get a hang of it. On the second toolbar you have chart, your trade portfolio. You can keep track of your history on the fourth bar, and then last but not least, you can have a look at your settings. Now I just opened a demo account. I definitely recommend, for those of you, I really want to touch on this subject, that if you're starting out, trade on a demo account. There's no rush, so get accustomed to the platform, get accustomed to how you adapt to certain risk parameters. Really just get comfortable with it. Okay, don't feel that you need to rush into it. Trade with a live account. I mean, it's up to you. If you want to trade a live account, what I did was I deposited a very small amount and I traded 0.01 lot for 6 months. Okay, that's what I did. So for 6 months I traded on a small account. I think it was roughly about $100. So that's what you need to do in order for you to get risk adverse. So nonetheless, when you go to quotes, you will see that we only have GBP JPY on. Now if you want to open a trade, you can see that the first option is trade, chart, details, statistics, and depth of market. You're only going to use the top two. So if you want to open the chart and you want to have a multi-panel view with regards to you seeing the chart and you can open trades, then that's perfectly fine. If you only want to open a trade, you go back to quotes, you select on the pair again, and you press on trade. Now you can see that you're not able to spot the chart on your mobile device. So what I like to do is just click on chart, and now here's my lot size, and I have an option to sell, I have an option to buy. Okay, but the only problem taking trades off from here is you cannot select your entry style like you can on the trade option. So over here at the top, you can see you can choose various styles such as buy limit, sell limit, buy stop, sell stop, buy stop limit, sell stop limit. You really don't need to get too much into detail with those in the beginning. Just stick with instant execution at first, and the entry, the lot size limit we said was we're going to use 1.19, correct? And I think it was a sell. So now I'm in my sell position, and you can see the market is fluctuating. All right, it's always going to start on a negative, and you can have a look at it on the chart. So once you see it on the chart, you can see how it's fluctuating. You can see your sell position, and if you want to enter your sell stop, you just get the parameter on my right hand side. You can see 191253. Now I'm just thumb sucking really. Then you click on the pen, 191.253. Let's have a look, and you can see on the chart, boom, my stop loss is in. Then you do the exact same with your take profit, 190648. Just swipe right, click on the pen, 190648. Okay, so that's what you do over there. Now, one thing that not a lot of traders know, even when they're trading for 6 to 7 years, I still get this question a lot, is how to close partials, because I'm a very adamant believer that you need to close partials, because I always believe feed the family first. Okay, so once you're in a decent amount of profit, secure that profit. Don't let the trade go up and then at the end of the day come back down, and then you taking a loss, or going down in profit and then coming back up and then ending up in a loss. You need to feed your family first. So closing in profit is not always a good thing, because if your previous 2 trades were losses and now you're closing your actual running winning trade in a small profit, at the end of the day you're not really making money. You're just feeding off from that quick endorphins that's being released or from you making a win. So what I like to do is really just close partials. In a negative, in a positive, it doesn't really matter. It's up to your risk management style. But if you want to do that, you swipe right, you click on this yellow or orange color button, I don't know what it's at your side, and then here at the top you can see we have 1.19. You just tap on it, and let's say you want to close, I don't know, a 0.30, then you just type 0.30, and you can see on the bottom the horizontal panel says close, order number, sell. Let me just say, there we go. So now I close that partial position and I still have a running position. So if I want to do that again, you can see now we have only a 0.89 position left. So let's say I want to close 0.39. Let's close it out. Now I only have a 0.50 left. And if you want to put stop loss at break even or stuff like that, then you have to go and get the risk parameters and then type that in. I know there's a drag function. I mean, I'm old school, I like to just type it out. But at the end of the day, it's only numbers. So you just get accustomed to it, trade with it on demo for a bit, and see how it goes, how you get accustomed to the mobile platform. So now that you've got a grasp on Forex trading and the whole premise that revolves around the trading world, it's time for you to practice and get a deeper dive understanding of how everything works. Now repetition is key, but the right kind of repetition. You cannot go and follow useless concepts and then just find yourself in a tool of endless research and trading concepts that doesn't work. I've been in this game 7 years now. I've seen it time and time again. We've taken students to really just paying off their student debts. We've seen doctors with the highest degrees join our community. We've seen single moms, single dads join our community, and then at the end of the day making more in a month than they used to in the yearly salary. That's the power of Forex trading. So if you want to join the community, if you want to flip the switch, be part of us, I'll drop a link down in the bio. And as always, I've got lots of free content for you guys to learn from, because it's about giving back and making a difference, leaving a legacy. But if you actually want to have a one-on-one relationship with me where I show you the ropes, I teach you how it goes in the trading world, then the link is in the description. Much love, fam. Hope you enjoyed the video. Stay safe and stay blessed.